I want to talk to you today about economic cycles. I'm talking about investment. First of all, it may be real estate investment. It may be investing in the stock market. It may be investing in cryptocurrency. It doesn't make any difference. The pattern is the same. One or two people invest. A couple of other people see what they're doing, think it may be a good idea, and they join in. And then more and more until there's a stampede as people look at them and saying, they must know something I don't. I want to get in on it. So whether it's a particular stock or whether it's getting involved in the stock market, whether, as they say, cryptocurrency, any other kind of investment, and real estate is also the same. I mean, 100,000 lemmings can't be wrong. And that's what happens with lemmings. You've got these little rodents, 2 or 3 of them, they start tearing across the field, heading for a cliff. Well, 2 or 3 more see them doing it and join in and follow suit. Then 2 or 3 more, then more. And next thing you've got 100,000 lemmings running full speed across the field to jump off a cliff. Doesn't necessarily mean it's a good thing to do. We just came through, during the COVID era, one of the greatest eras that we've seen in this century in real estate. And it happened the same way. Started out maybe a little slow, and then it started to gain momentum as more and more people wanted to have a part of the action. And so the next thing you knew, you had a stampede of people getting into real estate, to the point that if you wanted to buy a house, you were probably in competition with 12 to 15 other people. And as a result of that, you might end up paying $100,000 over the asking price. And to make your offer attractive, you'd go in without any protective conditions such as financing, even sale of property, and building inspection. And you'd take your chances. Well, I want you to know that I really firmly believe in real estate. And as such, for the end user or the investor, I maintain there's no bad time to buy real estate. If you're a speculator or a renovator, yeah, then you got to time the market a little bit. But the end user or the investor, no. If you are the end user, you want to buy a house that's going to be your forever home, and you find the house that just speaks to you, it's your house, it's the right house, then buy it. Don't worry about the economic climate. Don't worry about whether the lemmings are running, whether there's all kinds of other people buying or not. Buy it. Move in and enjoy it. If you can afford it, if you can structure the mortgage, you'll be so glad you did. And if in the future at some point you decide you want to sell it, again, the economy comes and goes a little bit, and even if the price is down a little bit, then the property you want to buy is riding the same economic cycle. It'll be down a little bit, and the move will be parallel. It's not a problem. So buy. And the same thing holds for the investor. Remember, you're going to buy and hold. A relative value is on paper, not something you're going to experience because you're not selling it. You want to know, does it carry? Is it good structurally? And will it attract good tenants? If it does, over time, 2 things will happen. One is that the mortgage will be paid off, and number 2, the property's going to appreciate in value. But while I say that there's no bad time to buy real estate, there's some times that are better than others. And generally speaking, as a rule of thumb, the better times are when the lemmings aren't running. Going back to 1983, I was selling real estate in Hawkesbury and doing very well at it. But the economy was mired in a recession, and interest rates were running at 21%. At that point, there was a new franchise, real estate franchise, coming to people's attention called RE/MAX. I investigated it, I really liked what I saw, and I decided to buy a franchise, which meant relocating. And I bought the franchise for St. Catharines. Now, I later found that the market was so bad in St. Catharines that the local board that normally gave out production awards called the $1 Million Club, they suspended those awards for 2 years because nobody won them. The market was that bad. Well, I came to St. Catharines, opened up the office, began to attract agents, and you know what? Here, 40 years later, I'm still here, and I'm glad I made the move. A few years later, 1994, again, we were involved in coming out slowly out of a recession that started in 1990. Real estate wasn't moving. It was a tough market. And I decided to buy an existing RE/MAX office in Burlington. And so I did. I bought the office. I had to go in and spend a lot of money on renovating the office and getting things up and running to the standards that I like to operate under. And business people and established people scratched their head and said, this doesn't make sense. What does he know that we don't know? Well, time went on, the office grew, and it was a very important part of my business model for the next 22 years. I bought it, but the lemmings weren't running. And in real estate, the lemmings really aren't running today. What does that mean? Well, that means that there's a good selection of property right now. It means that sellers are responsive to offers. It means the chances are you're not going to be in competition with a lot of other people. It means that you can put in protective clauses like conditional on sale of property financing or building inspection. And you will find that over time, you will be so glad you bought that property. But you'll find people that watch you make that move and scratch their head and say, what does she know that we don't know? Just smile and tell them to watch. They'll understand over time. Thank you very much for taking time to watch this video. I look forward to talking to you again next week.